Welcome to the B.F. Anderson Technical Report for May 19th. Jesse Livermore, Bernard Baruch, Peter Lynch, Warren Buffett, several of these, these guys that were from the past are worth studying. Their strategies are important to study. Livermore was probably one of the most successful investors of all time. He wrote a book that I would recommend highly, Jesse Livermore's How to Trade in Stocks. He had a rule in there, several rules, but rule number 18, it says, if you cannot make money out of the leading active issues, you are not going to make money out of the stock market as a whole. I have found this to be true. And, if you go back and study history, an interesting period was in the 1972 area, really 66 through 72. This is what you call the Nifty 50. It was basically 50 stocks that everybody owned. All the funds, everybody that was anybody owned these stocks. Now, this would have been like an index fund. And the thing about these stocks is, like, Polaroid's gone. There's a lot of names here that are still around. Avon, Digital Equipment, Kmart's gone, Simplicity Pattern's gone, Xerox is gone, Burroughs is gone. So in other words, these stocks that peaked in 1972 through the 1966 to 72, it took till 1982 for them to get back to their prior highs. So it meant that you had to sit in these stocks for 10 years. But one thing to notice about the list was that this is 1972. Notice that there's not Walmart on the list, because back in the 70s, which I was in the market back in the 70s, the only way you could come out successfully is by finding Walmart. So let's look at some of the names that are currently the active issues. Apple. Apple broke support here. Now, what support is, what we're trying to do with support is saying, okay, this is where buyers have come in the past. Support. They're supporting the price. Well, when you break support, it kind of means that those buyers aren't out there anymore, and the sellers are in control. So with Apple, you got to break below 154, which was support. Then the other support that I'm seeing right now is around 138. It needs to hold 138, so we'll just have to see. Yesterday was kind of a rough day. This is Amazon. You can see here pretty much blowing through support. Here's Microsoft, same thing, breaking support. Here's Tesla. This was a real hot one in the last bull market. With bull markets, since 1928, we have on average a bear market about every 4 years. And so what the pattern seems to be with a lot of people or a lot of investors is they'll make money in the bull market, but then they give it all back in the bear market because they're doing a buy and hold thing. Well, to me, it makes more sense to make money in the bull market, realize you're in a bear market, and pretty much go to cash. Now, also I wanted to point out William ONeill, who's another famous investor, mainly operated back in the 70s and 80s. William ONeill came out with a study that said the typical bear market, you get 3 down legs, and then you get what we call the dead cat bounce, second down leg, then you get the dead cat bounce. We are currently in the 3rd down leg. So statistically speaking, supposedly good things come in 3s. So hopefully this is the beginning of the bottom. What we want to see here, and there's no rush. You just have to take your time, because what we want to see here is we want to see this drop stop, and we want to see a consolidation and possibly an upturn. Nasdaq Composite, as you can see on a daily basis, we're still on a downtrend, actually breaking down as we speak. On the monthly indicator, which is the 10-month moving average, we're below the 10-month still, which is a sell signal. Now, on the weekly indicator, we're continuing to be under the 35-week moving average. 35-week moving average has turned down. Here's the S&P, Standard & Poor's, again downtrend, again breaking down, continues to be in a downtrending cycle. Here's the weekly graph on the S&P, the monthly graph. It's below the 10-month as well, and the 10-month is turned down. Here's the weekly graph. You can see again the 35-week and continue to heading lower. Now, on the aggression index, I wanted to point something out. Again, the aggression index is where we're trying to see what the institutions are doing within their portfolios. If they're shifting over to consumer staples, which are defensive strategies, utilities, healthcare, if they're switching to the defensive strategies, this line is going to go down. But I think what's important to note right now is look at the steepness of this particular line here. Now, we got a little bit of a bounce yesterday, but what we need to see here is something of a consolidation and then a breakout to the upside. It's just not happening right now. Now, our three economic indicators, you can see interest rates up around 3%, kind of stabilizing a little bit. Price of oil continues to pretty much move sideways. Financial stocks, and along with interest rates, are not acting all that well. In fact, they kind of broke down again yesterday. New lows, we're continuing to see elevated new lows, very high readings here. However, we have seen a little bit of improvement here in the number of new lows here in the last 3 days. Sentiment readings, now this is the only positive that I can really come up with right now. There's an extreme level of fear out there right now, and to me that is a positive. The trend strength continues to be zero. In fact, you can see here with the Nasdaq that we're challenging that old low again. So again, what William ONeill was pointing out is you get 1, 2, and now you're in the third time. Hopefully that's going to change things. S&P 500 continues to have a zero trend strength, actually breaking that old low here yesterday. Now, I also wanted to point out, it seems logical to me that we want to keep an eye on the bond market. This is the 20-year Treasury bond fund, and you can see really big-time downtrend going on here because as interest rates go higher, the value of the bonds go down. Well, hopefully we can see some stabilization in here and get a breakout to the upside because I'm pretty much of the opinion that the stock market is not going to bottom until the bond market bottoms. So the bond market may be the first place you see a serious bottom. Volatility index continues to stay somewhat elevated above 30. Realize now this is a 5-day moving average on the VIX. Continues to stay somewhat elevated. But really what would be interesting to see is that if we do get a break to the downside, if the VIX could get up around 40-ish, that might be signs of a capitulation. Now, in the top 5 stocks that we're keeping an eye on, this is a medical company called Lantheus. Just kind of moving sideways, not really acting all that great. Looks okay. Here's Occidental Petroleum. Of all the energy stocks, this is probably one of the strongest energy stocks out there. This is one that Warren Buffett's taken a position in. We've got a breakout above that base. However, yesterday we pulled right back into the base again. So it continues to be somewhat iffy. Arch Coal, and again, we're just continuing to see these commodity cyclical stocks. The coal stocks are actually been acting, quite well. Here's Devon Energy, which is another energy stock. Devon's real active in the Permian Basin. Stock has been in an uptrend, actually broke out of this base here. So the energy stocks continue to dominate the market. Now, this is mainly a natural gas producer, a company called EQT Corp. Again, you got the rally here, sideways consolidation, somewhat of a breakdown, trying to get going again. But, with a lot of these strategies, you have to realize that some sectors, now, let's just say something like Tyson Foods, it's hard to get really excited about, the prospects of these companies. My friend calls it picking up nickels in front of a steamroller. In other words, you're taking the risk of the stock market, but you're going after things that really have the potential of mediocre returns. That's kind of how I feel about these commodity stocks, but I could be wrong. But be careful with them. If you have any questions, please let me know.